Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. First of all, the markets have yesterday seen a small correction. That's a completely decent correction, and it was bound to happen after so much rally. And it is only a good thing, I would say, because a continuous rally would only make things worse. Because a continuous rally would have also brought a big correction, which would have kind of hurt a lot of people's sentiments. But at this point of time, markets have kind of played safe. And the interesting part is yesterday, both the institutions, that is FIAs and DIAs, were on the buying side. Though FIAs were on a very small buy, the DIAs have been buying almost 4,000 crores, and still the markets have actually fallen. So, does that mean it is more of a profit booking by the retailers? Well, that could be the possibility. So at this point of time, one very important thing to be looking at, see, there are a lot of retailers who came in the past 1 or 2 years after Corona and are invested and sitting with some very good profits. Now, if they had booked profits in mutual funds, the DIAs would have sold it. But yesterday it was not that. So it was some profit booking in the stocks that has happened, and that kind of pulled the markets down. So we could see Reliance was down yesterday. SDFC was kind of slightly weak. So overall, the markets have seen a decent correction for now. Does not mean any negative, I would say. But then, of course, there was a CPI data, the Consumer Price Index, or the inflation data that came up yesterday, both in India as well as US. Now let's talk about India first. So India's CPI has grown. Yes, has gone up at close to 5.5%. It is of course less than the RBI target of 6%, but still it has actually gone up from last time. It was close to 4.8%. So that increase has mainly come from food prices. So why also is because this is something that we've discussed. India is a lot dependent on crude oil import, and crude oil prices had gone up last month. So that is why this can be expected. So I'm not expecting a major negativity out of this, because fuel prices have actually gone down now this month. Crude oil prices have been falling continuously. Even yesterday, there was a news that there would be a slowdown in consumption of of multiple countries in the next upcoming year, and because of which the oil inventories price have actually come down, which is actually a good thing for India. So probably next month the inflation should kind of slightly cool off. This month it could cool off. The report could come next month, so that could be watched closely for now. However, Indian banks, central bank will not be looking at taking any action until the target of 6% is crossed. So that is the only thing that we need to watch out. If 6% is crossed, then yes, there are chances RBI can go ahead with some more interest rate hikes. So that's something that could be watched. Now talking about US. The US inflation actually came in almost flat compared to last month. So not higher nor lower. So it was kind of okay, and that actually kind of steered the market higher. And we could see US markets closing higher yet again yesterday. So now one thing that you need to note: day before yesterday, US markets closed higher. Yesterday, US markets closed higher, but in India, Indian markets saw a profit booking. That was because when the US markets were not rallying much, Indian markets kept rallying. So at this point of time, this effect of US market going up is only shown in the Nifty futures, because of which Indian market may open with the gap up, but then will it sustain is the question at this point of time. So one thing for sure, yesterday also Nifty has hit a new record high. Intraday, of course, not in closing basis, but intraday it did touch a new record high and then come down. So at this point of time, tomorrow being the expiry, Nifty expiry, and today being the Bank Nifty expiry, markets are going to be absolutely volatile, and that could, of course, make some movements in the market. So we'll be closely watching how the market moves. But at this point of time, volatility is of course going to rise. So yesterday markets were kind of consolidating the first half of the day, and then the second half is when we could see a major fall coming in. So will it take some support at this 20,900 level is an important question, because 20,900 is going to be important support at this point of time. So on the lower side, I would say 2,900 to be watched, and if at all it is broken, then we can see a slightly bigger fall downwards. But if support is taken at 2,900, on the higher side 21,000 will act as a resistance, and if that is broken on the higher side, is only when we can expect the rally to continue back. So this level to be watched keenly, 2900 to 21,000 is an important level to watch at this point of time. So let us see how the market goes today. Today being the Bank Nifty expiry. Based on that, we will discuss on how market could go ahead. But at this point of time, I would of course clearly tell all of you, like I've told you earlier, higher levels are not for buying big, but booking profits. And if you have any leveraged positions, leverage means if you've taken a loan and invested, or if you have taken leverage from the broker and bought some stocks, do clear it up. This is the time you need to clear that up. Don't keep that anymore with you, right? And those who have funds and are sitting with some decent profit should book some partial profit and keep that fund ready for deployment at next stage of market dip. That's something I would say at this point of time. Now when we I just realized that every day we are coming with stock market podcast, and a lot of people think that MPI Invest is a stock market company. Absolutely not. Why do we do this on a daily basis? Well, it is simple. I like to be updated about the market, and I like to keep our investors also updated about what's happening in the market. Now, why this is important? See, everything that we talk about every day, the crude oil prices, your stock market, these are all directly affecting even your FD or your recurring deposit or even your bond yield. So all these things. So if you are invested in FD, you should be listening to this. If you are invested in RD, you should be listening to this, because that is when you know what could be the expectation of the returns on these asset classes in future. That is what we recommend knowledge here. So this is not just the stock market, I would say. In fact, probably I should start stopping to tell the stock market podcast, and I should say the financial podcast, right? So do put in your suggestions down as a comment section. I would like to hear it from you. So because I just got a message yesterday from one of a person who said that MPI Invest is a stock market company. So I felt really bad about it. We are not a stock market company. We are a financial planning and investment management company. We are basically a wealth management company who give you 360 degree of wealth management with all the kind of solutions, best solutions available. So what we do is we sit with you, make a personalized financial goal chart, and based on that, mark your investments on different asset classes. That asset classes include gold, silver, bonds, FD, real estate, and everything, and stock market, of course. So that is how we manage your in portfolio. That gives you great return, and you also achieve a financial goal. So we are not a stock market company. We are a financial management company or a wealth management company who helps you grow financially, right? So I hope that is clear with all of you. And of course, if you need to plan your finances and your investments, you can set an appointment with us, schedule a meeting with us at mpiinvest.com. Very limited slots available, so do mark it. It's completely free of cost. Just go to mpiinvest.com and schedule your meeting with us. So that's it for now. This is Srikanth Rajan signing off until we catch up tomorrow morning with more details on what's happening in the financial markets and how to manage your investments. So that's it for now. Goodbye. Have a great day. But again, like I always say, do press the like button if you love the content that we share. Do share the podcast with your friends and relatives to help them learn and invest together with us. So it's not anymore a stock market podcast, but a financial market podcast. Okay. Goodbye. Have a great day.